Nike is one of the strongest brands in the entire world. In fact, Forbes has them ranked the 13th most valuable company, and they sell more shoes than anybody else. However, the stock price is down over the past 5 years. Their last earnings report was much worse than investors anticipated. Their 2024 revenue was essentially flat from the prior year, and the Q4 revenue growth was negative also from the prior year. The reason they gave was poor macroeconomic conditions, particularly in China, where consumer traffic was down as much as double digits from the prior year. Nike's biggest markets are the US, which makes up 43% of their total revenue, and China, which makes up 15%. The US has been dealing with high inflation and high interest rates for a while, which is causing personal savings to decrease, which means less sales for Nike because of less consumer spending. China has also been having issues, such as the housing crisis, and China revenue for Nike has been on a downward trend. It seems that Nike is suffering due to macroeconomic issues and not because of brand issues. In fact, other retail businesses have been suffering due to this, such as Lululemon. Moreover, in order to turn things around, they recently appointed a new CEO. If we take a deeper look at their financials, their revenue has remained flat and has even been decreasing for the past 3 years, staying at around $50 billion. Similarly, their net income has remained flat at around $5 billion for the past 5 years. However, their free cash flow has been growing very nicely over the past 5 years and is currently sitting at $7 billion. More positives about this company include their balance sheet, as they have $10 billion in cash and only 12 in debt, which is very little for a company that has a market cap of $121 billion. They also have a very good return on invested capital of 15% and a good return on equity of 37%. And they are selling for a PE of 22 and price to free cash flow of 16, which doesn't seem expensive. However, in order to take a deeper look at the valuation, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. As you can see, according to my discounted net income and free cash flow model, the intrinsic value for Nike is between $52 and $133 per share, and the stock is currently trading at around $79. This also means that if my low assumptions occur, you are going to make a 2.75% annual return on your money, middle 11.5% and high 19.75%. I believe my assumptions are reasonable, as I have the company growing 2% annually for the next 7 years on my low assumptions, 4% on my middle, and 6% on my high. I assumed an average profit margin and free cash flow margin of 10, 12, and 14%, which is around what they have been doing. I assigned a 15, 20, and 25 PM price to free cash flow at the end of the 7 years, and assumed they buy back 2% of their shares annually for the next 7 years, because they have been buying 2% of their shares in the last 3 years. By the way, these returns include the dividend, which currently has a 1.8% yield. Lastly, analysts are expecting little growth, as they have them growing their revenue to $54 billion and EPS to $3.91 in 3 years. If you assign a 20p to the company then, it would make it a $78 stock, meaning essentially no returns. In conclusion, if you believe that this is a temporary issue due to lower consumer spending, and you believe Nike is trading at a discount, this might be a good opportunity to buy this company, which is a high-quality company. I am personally not interested because I don't believe it is discounted enough. I hope you found this video valuable. Let me know what you think about Nike stock in the comments, and I'll see you in the next one.